Three stocks to avoid in 2024. Number 1, NIO. Chinese car maker NIO has won plaudits for its electric vehicles, and in the latest quarter, the company delivered 55,000 cars, a figure that was up 136% year over year. However, NIO is also losing a huge amount of money. Net income over the last 12 months was minus $3 billion, which was even worse than in 2022, and a price war for electric vehicles has sent NIO's gross profit margins down from 19% in 2021 to under 5%. Although headline growth looks good, it's in fact much lower than rivals BYD and Li Auto. To top it off, NIO is investing in battery swapping technology that is unproven outside of a few big cities. According to Bloomberg, the payback time for one battery swap station is 8 years, based on 50 battery swaps per day. Given NIO only has $5 billion of cash in the bank to fund all of this, investors in the stock could be waiting just as long for a return. Number 2, Owens & Minor, ticker symbol OMI. This is a small cap stock that was heading towards bankruptcy before the pandemic totally reversed its fortunes. The company suddenly saw huge demand for its healthcare products such as gloves, gowns and respirators, and the stock soared over 1,200%. However, since then demand has normalized and the company is now facing new concerns. According to company filings, roughly 40% of earnings are coming from healthcare products dealing with diabetes and sleep apnea. Both of these product segments are at risk from the explosive rise of weight loss drugs like Ozempic, which are changing the face of obesity. Combine that risk with a weak balance sheet and this is another stock to give a wide berth. Number 3, Snapchat. Snapchat stock has almost doubled since the beginning of October, giving the company a valuation of almost $30 billion. This performance has been driven by a third quarter report that showed a 12% increase in daily active users to 406 million, and this growth appears to be driven by the launch of new AI tools inside the app. If Snapchat can continue this growth, then the stock absolutely has more upside ahead and could potentially be a good buy. But it's worth bearing in mind that Snapchat is still losing money. Net income over the last 12 months is negative $1.36 billion, and Snapchat spends an obscene amount of money on stock-based compensation, around $1.4 billion. That's over 30% of revenue and more than half of gross profit. So if the story around Snapchat changes, the stock could quickly give up its gains. So those are 3 stocks to be careful with in 2024, but these are my personal opinions, not financial advice, and I've got no position in any of these companies. For more investing videos, make sure to visit my website, 3minutebreakdowns.com. Thank you for watching.